Well, hi, everybody, and welcome to the latest LinkedIn Live from Women on Boards. Well, actually, it's not just LinkedIn. As I said to somebody, it's like sitting at the Fox News desk here or any other news desk that you want to see, ABC News Desk, Conversation News Desk, anywhere else, because we are going live everywhere on all of our social media platforms. Today, we're talking about something called reading between the lines. So learning to read between the lines of financial statements is a critical skill for board members. It's a critical skill. I think it's a critical life skill, to be honest. You learn to equip yourself to make better decisions, assess risks more accurately, and understand a company's true operational dynamics. Once you've got a strong grasp of the financials, you're then able to branch out from there. You're able to foster and oversight a risk-aware culture within an organisation, and you're able to exercise your governance roles really in a much better way. So today I'm talking to chartered accountant and forensic expert Sara Deady and restructuring and turnaround specialist Melissa Smith, both partners at McGrathNicol, who of course is a great corporate partner of Women on Board. So welcome and hello to you both.
Hello, Claire.
Okay, right now, business is tough. We've just seen productivity's flatlining. Pretty much everything is flatlining. Paul Keating's on the hustings, giving the recently elected government a bit of a serve and the fact that they need to be doing something about this. Insolvencies are also on the rise, as I understand it as well. Yet many companies and their owners and boards continue to leave their run far too late when it comes to getting ahead of a potential insolvency or even something that looks like a blip in the road and then turns into a major crisis. Is this due, do you think, to not having a true grasp of the financials, being over-optimistic that things are going to come good, putting your head in the sand, or a combination of all of these? Sarah, I'll flip to you first.
Yeah, certainly. I mean, I think Melissa, being the turnaround specialist, can certainly talk to this better than I can, but I would certainly say it's a combination of all of those things. But I might just hand to Melissa, who will talk through those intricacies, I think, around the financials and when things do go wrong or can go wrong.
Sure. So yeah, I totally agree with Sarah. It is absolutely a combination of all of those things. So we find that definitely people can be too optimistic, and that feeds into their forecast that they're preparing. So they'll make very ambitious, very optimistic forecasts and then make decisions based on those, which are not appropriate in their circumstances. We also see a bit of a focus on sales versus profit, so a sales-driven culture, but not looking at the profitability of a particular customer contract, which then obviously flows through to the bottom line. We are surprisingly starting to see people seeking help earlier than they have in the past, and we've been saying this for as long as my career. People need to get help earlier, and we are starting to see a bit of a move towards that. Certainly a big lot of people that are seeking help way too late, but there is a little bit of a move towards people getting help earlier, and that's when you can actually do something about it. So if you're leaving it to the day before wages are due and you can't pay wages and you haven't spoken to your bank about it, there's probably not a lot you can do about it. But if you're talking to your bank earlier, talking to your stakeholders earlier, there are some potential options there for you. And if you've got some cash available and some debt facilities available and some strategic options available, you might be able to turn around.
Well, it's great to hear that people are picking up that message to go early, because that is a really, really critical one. And of course, a whole lot of that is around the fact that, if you've got a board or even the owners are across all of those financials, then that really helps them see those differences. So even though all of our financial reporting is incredibly standardized, it's governed by accounting principles, of which there are probably far more than I will ever know, but they don't tell the full story at face value. So why is that the case?
Whilst the accounting standards are very comprehensive, there's probably a varying uptake of those. So particularly in those smaller organisations that are preparing financial reports for a different audience compared to listed companies where they've got a very strict regime in place and more sophisticated reporting generally. In those smaller organisations, they're not necessarily following the accounting standards to the letter. And financial reports, on the face of it, if you look at the profit and loss statement, the balance sheet and the cash flow statement, they're not that detailed. So people need to go further outside of just the face of those reports. So, for example, within the financial reports, there are notes in there which to a non-accountant look incredibly boring, but they are where Sarah and I have all of our fun. That's where all the detail is. That's where, well, not all of the detail, that's where some of the detail is, and that will help you make some better decisions around those. The other issue is that financial reports are just at a point in time, and if you're looking at annual financial statements, you might be looking at them 6 months after the event, and things have changed in that period of time. So key will be to look at what your historical trends are, but also what the forecast looks like, to understand what position the entity might be moving towards.
I think the other thing just to touch on there as well, Claire, is that the numbers are there and you can rely on those numbers and you have to rely on those numbers. But is the story that you're being told as a board member, does that story align with what the numbers are showing as well? I think it's probably another thing you often see, you know, a great story is being told, but as you look at the detail of the numbers, well, does that quite line up to what the numbers are showing, I guess, is another thing to just be cognizant of.
So the story's got to line up with the numbers, and you've got to look beyond. You are right. The fairly sort of summarised detail well, you don't get that detail within things like your P&L statement. So you mentioned financial notes. To what extent do directors need to be able to really understand those and decipher those, or know enough, or is it enough to know what they don't know and to ask questions about the financial notes?
Well, I think probably both of those statements are correct, that they need to get to a point where they do understand those. If you look at any financial report, the first note in there that you look at is the really chunky, boring, wordy one, which talks about what accounting principles they've applied. And admittedly, that you might want to read that to put yourself to sleep at night. But that looks at important things like revenue recognition. So if you have a long-term contract with a customer, when are you recognizing that revenue? So that has a huge impact on the face of your financial statement. It will also pick up on any disputes that might be on foot but not yet quantified. And then if you dig down further into the detail, it will split up things like other expenses, other assets, other revenue. It will hopefully, in those notes, put some detail behind that. So if you have other revenue of quite a large number, if it has the word other in front of it, it's key to understand what that other is. So is it recurring income? So is it interest that you're receiving on a regular basis? Or is it something like proceeds of an insurance claim, which hopefully is just a one-off event, and you're not relying on that every year. So it's quite important to get into that detail. So yes, definitely they need to get across that detail, and to the extent that they are not, they need to ask the questions of their finance team.
So given that it is important to know what questions to ask, what are the key areas, either of you, that directors miss when it comes to board meeting in your experience?
It's a little bit across all of the financial statements, to be honest, and I think it comes back to that detail. So for example, in your customers, do you have concentration risks? So do you have a few key customers that you're relying on? Do you understand what their financial position is? So if they have financial stress, what impact will that have on your business? What's the aging of your customer debtors? Are they starting to get older and indicate that maybe they're not as collectible as you'd otherwise like them to be, or are there some disputes there? Same on the other side for your suppliers. Are there disputes or are there aging issues because you're having difficulty paying those suppliers? Are there any supply chain disruptions? And that's been something we've seen over, I hate to say this, but since COVID, that's had quite a big focus, that people are more focused on supply chain than they had been previously.
Yeah.
The detail around your finance facilities as well. So what's the status of the relationship with your bankers? What's the status of your facilities? Are they up for renewal in the short term? And have you started talking to your bank about that? What's the status of your banking covenants as well? So are you compliant with them? Are you tracking those? Are you at risk of breaching those and need to be talking to your lenders forewarning them of that. Probably intangibles as well are something that we see. People will look at, brands and goodwill and patents. Lovely to have in your balance sheet, but what we like to see is something that can easily convert to cash. So
Cash.
stock. So is that balance sheet being propped up by intangible assets, or is it, are there some more tangible, easily realisable assets there? And then another factor, looking forward as well as your forecast. So what are the forecast assumptions? How do they compare to history? And are you rolling out the same forecast that you always have, not taking into account some change in circumstances? Or are you unreasonably expecting an uptick in your financial circumstances? So that hockey stick sort of forecast that we see from people.
Sarah, anything to add from you? Because there's it seems so simple, really, and yet so many companies find themselves in difficult circumstances, don't they? They repeat these mistakes.
They do, sadly, and that's probably where I've spent the last 20 years in my career as a forensic accountant. It is pouring through those, and as you say, looking at things at the face value on the financial statements won't give you that detail and that level of inquiry that you need. But I think so often it's really being armed, I think, with knowing exactly all these things that Melissa is talking about, understanding how these statements come together, understanding how the figures all come together and what they mean. And then once you know that, it's then having that rigor around asking the right questions and really challenging where things are at within the business, so that you understand, you come out of a board meeting going, I know exactly where we're at the moment, and I know what these numbers mean and where we're going. I think it's probably the key thing. If you're confused, there needs to be more questions asked, and that's what we see time and time again, that there were red flags, there were issues there that just weren't raised or weren't elevated, or that the answers that were given just weren't good enough and probably needed to ask that second and third challenging question.
Yeah, really great points there. Switching more to looking at risk, which of course we also cover in the finance and risk workshop that we offer with McGrathNicol. You've identified financial and cyber still remain the top threats for companies, according to all of the work that you are doing. As a director, of course, you're not working in the business. So how do you get visibility over these risks? Are there any tools or any training you need, any tips you can give?
Yeah, I think that there's a few things, I think, Claire, to talk to there. I mean, I think it's a bit like on the financial side of things. You need to understand, how these risk management frameworks come together, what the standards are and what the guidance are that is out there around how to build a really strong risk management framework. What builds on that is, what is your risk appetite statement? What level of risk are you willing to accept? And to dig that bit deeper, when we look at, as you said, Claire, that financial and cyber risk, what are the risks that face your business, and really challenging that. And that's where board members really have to work really closely with their executives to understand, what are the risks within the business? What are the external threats? What are the internal threats to the business? And articulating that in a really clear way in documentation and papers that come up to the board, so that you can ask those challenging questions and ask, well, where are we at? Like, we've got this risk. Maybe it's cyber risk, maybe it's insider risk. What are we doing to address that risk now? And should we be doing more, or are we comfortable at the moment with where that's at? I think that's that internal piece of really getting an understanding of how the business manages risk at that executive level and all through an organisation. I mean, risk has to be embedded at every level within an organisation. But I think the other side where directors bring so much, and that's where the value is understanding what risk environment is an organisation working in. We've talked about the insolvency market at the moment. Things are tough for people at the moment. What impact do those external factors have on your business? And directors challenging that. Again, it's that whole, okay, I'm being told a story, but I'm hearing in the media that this is an issue for the sector that we're operating in, and being cognizant of that. And then I think finally, I think directors, we are seeing this, we're seeing a lot in the enforcement area. We're seeing not a lot in the sort of increased legislation around risk areas, is what are the obligations that directors have around these different risk areas, and being really cognizant of that, because that ties straight back into, what level of risk and what the risk appetite statement is for an organisation. So I think to me, that's those three key areas. Understand your risk management frameworks to be able to get the information that you need, understand the threat environment that you're faced with, and then understand what your obligations are.
Okay, really, really great there. Anything to add from you, Melissa, on that one?
I think no. It's really just arming yourself with as much information as you possibly can about the industry, the economy as a whole, but also within the business. So if you are on site for a directors meeting, to the extent that you can, taking an opportunity to walk around and talk to some staff at all levels, because more junior staff are a great wealth of information about what they think about management and the strategic direction of the company and what's being missed. If you get walking
the shop floor, in other words, so you understand how things work. You touched on something there, Sarah. You talked about external risks, and quite often, while these are well understood, they're well publicised, we see them in the media, there's surveys about them, people generally get what they are. You were saying that in a chat that we were having earlier, there's an increased threat, I should say, of insider risk. So is knowing who has the keys to the house inside the organisation something else for directors need to think about?
Yeah, I think it certainly is, Claire. I mean, I've worked in this insider threat area for the last 20 years being a forensic accountant. To me, that insider threat has always come from the financials. The motivation for an insider within a business is to steal money. That's the ultimate motivation that we see, and that's where I've spent the last 20 years in my career. So as a result of that, what I've seen and what I've worked with organisations on is mitigating that type of internal insider risk. So delegations of authority, making sure you've got segregation of duties, all of those type mitigants against risk. But what we're seeing more and more is we've obviously seen cyber, is the front page of the papers all the time, those external threat actors attacking a business from the outside. But what we are seeing more and more of is insiders within a business perpetrating the same type of attacks that those external threat actors are. So having whilst we think of and part of the course is around that finance risk piece, is what are your other assets within your business? It's your information, it's your data, it's your other assets and information that is so valuable to these external threat actors. And protecting that data and information is absolutely key. And it is the insiders within your business that have all the access in the world. As you say, Claire, they've got the keys to the house. We've been so busy protecting the perimeter and making sure the doors are locked. But what about the person that's inside the house? And I think we're seeing that play out in a couple of different ways. You've got those accidental insiders, those that mistakes are made and there's a slip and data is sent out the door or it's published online, or you have those malicious insiders or those that are being coerced in some way to use this information and to take information from within organisations. So I think it's certainly something that we are seeing more of a focus on. They're difficult risk frameworks to build, but there certainly is an increased focus. And from a regulation perspective as well, we've seen obviously the SOCI Act, the Security of Critical Infrastructure Act. It talks exactly to managing these insider threats within a business. So
it's really interesting that you're speaking about that, because Neeru, who is watching, has said there's no risk appetite in safety, which of course is the people risk, and the fact that we've got very strong protocols around WHS, and there's the manslaughter amendments which directors need to understand, which as I understand it is that this is actually, there's some key liability here, isn't there, when it comes to directors around protecting people. Sarah, you were talking about earlier on as well when we were having a chat prior to this webinar that the geopolitical threat actors, and I had to get my head around this, are even placing people in an organisation, or if they can't get in the organisation, in the supply chain of an organisation to gain access to internal informations and systems and to key people. Is that really happening?
I'm afraid it is. And I think it's
a sad old place.
Sectors and different industries, obviously, but we are certainly seeing that. I mean, I think as I spoke to those external threat actors have always targeted from the outside, but there is that opportunity there to place somebody within an organisation to get access to critical information and assets, and that's really what we're talking about there. We are seeing an increased, and this is our interconnected world and all these interconnected, companies and with data and information, we are seeing, as Melissa spoke to earlier, this supply chain piece. Who is it that you are doing business with is really important, and what access to your information, your own company information, do those in your supply chain have? And that's what we've seen. We've seen a couple of matters where we've had these external threat actors who are very sophisticated, very well resourced. I mean, these are organised criminal syndicates where they are placing or trying to place people within an organisation to threaten, whether it's to just cause mass disruption or to access particular information. And we've seen where they've been ineffective in getting somebody within the core organisation that they want to get to. So they're placing somebody within the supply chain, within that supply chain to that organisation, where they can try and come through the back door and try and get the information that way. So organisations are certainly facing these multifaceted threats, but I think another key one is around this piece that we're talking about is how you manage your material service providers. We've seen new APRA regulations around these material service providers. And it's a really key one that I think is already starting to filter through organisations. But yeah, managing that risk externally. It's certainly not a case now of being able to go, oh, they take care of that. That's their responsibility. It's your risk. You own the risk. You own the information.
Yeah,
wow. You'll be the one in the newspaper when your information goes where it shouldn't be going.
Or not just the newspaper, out there online and everywhere else that you just don't want to be. Look, we have to wrap this up, but Melissa, what are you seeing in terms of risk appetite at board level with the work that you're both doing, I suppose? And is this impacting the level of detail that they want to see from people who are reporting to them?
Again, it's probably variable. That there's some organisations that are relying on the same types of reports they've always been relying on and not considering whether they're still fit for purpose. At the other end of the spectrum, there are people wanting a huge amount of detail from their executive. I think the key is balancing the two of those. So it's having the detail available that sits behind that information, but it's also having sophisticated reporting that touches on the key issues, touches on the risk, touches on the financial aspects. And that's where the use of dashboard reporting can be quite helpful. So making sure you've got a really slick report, but then that detail sitting behind there so that you can drop down into that level of detail if you consider that something's of concern or of interest to you.
All right. Well, look, thank you both very, very much. If anyone who's listening to this wants to hear more from these two partners, and in fact, we are joined by a third partner on this course, Emma Boucher, who comes from the Melbourne office from McGrathNicol. Please join Women on Boards for its Director Essentials Finance and Risk workshop. We've been running these in partnership with McGrathNicol for many, many years. They are a fantastic deep dive into what you need to know as a director, and you have heard there is a lot that you do need to be knowing, that there's a lot there that you're personally liable for, there's a lot there that you need to be on top of in order to be able to exercise your fiduciary duties well. It is a great program. It's the first one's on the 20th of May, so I've just commend that to you as well. But before we go, Selena has dropped in a question saying, would it be fair to say it's essential for directors to require the executive to tell a consistent, plausible, logical, explicable story, back to the story, about the financial decisions being made? She doesn't mean a fiction, of course, but she means telling a story. So one of you mentioned how the story needs to be commensurate with the financials. Does that need to be something that rather than just giving the board the financials, the executive's actually telling them a story to help them interpret that also?
I think so. And I think it comes back to that appropriate reporting at the board level. So it's having the set of financial statements there, but it's also having a proper briefing pack that covers off on those key issues. We've seen many times where people will say, oh, I literally in the last few weeks, I've had someone saying everything will all be fine now that we've got this extra funding source. And you look at their financial forecast and it's literally in deficit for the next year and a half. So that's an extreme version of that. But yes, absolutely should be getting a story from management and having enough financial acumen yourself to be able to question that story and compare it to the financial reports you're receiving.
Is there anything to add?
No, I think that's 100% it. I think that the story is so important. What sits beneath those numbers is the key piece. 100%.
Yeah, great. Well, for all this and more, you can join us to continue the conversation on the 20th of May and some other dates as well. We could talk about this all day because there's a lot of rabbit holes that we could go down here. But for now, I just want to thank you both very much for taking the time to join us here at the Women on Board's LinkedIn Live. Thanks and goodbye, everybody.
Pleasure.